When the stock market went into free fall late last year, a host of fabulous long-term outperformers suddenly seemed to lose their mojo. Take S&P Global, SPGI, the company formerly known as McGraw-Hill Financial. S&P is mainly a ratings agency. They're part of a trio of companies that rank the creditworthiness of bonds, which is a huge business. But the company also has a market intelligence division where they provide professional money managers with the data and analytics tools they need to do their jobs. And, of course, S&P Global runs all those S&P and Dow Jones indices along with a host of others. Anyone who makes an ETF based on S&P, it ends up paying them some money. Now, like nearly everything else, S&P Global stock then pulled back dramatically in the fourth quarter, bottoming the day after Christmas, and then making a stunning comeback ever since. It's now 14% just this year, even as it reported a pretty serious slowdown in one of its core businesses. No matter, the bottom line was terrific. Let's dig deeper with Doug Peterson. He's the president and CEO of S&P Global. Find out more about how his company's doing and where it's headed. Mr. Peterson, welcome back to Mad Money. Good to see you, Doug. Have a seat.
Great to be here. Thank you so much.
You did something remarkable. I want you people to talk about this transformation. There was a time where if you had dramatic debt issuance decline, your company really would not have the kind of bottom line. You had an amazing bottom line. You've reinvented this company.
Well, if you think about it, we are not just a rating agency. We also have, you talked about in your opening segment, but to have these subscription businesses with Platts and Market Intelligence, and then sometimes there's actually almost an upside when you have some kind of issues in ratings. You've got the index business, which is picking up the volatility and doing very well in that kind of an environment.
But it's still, 19% global debt issuance decrease, and yet you had a huge amount of profit doing big buybacks. That's a fantastically profitable business you have.
Well, if you think about it, what we did over the last 5 years is we narrowed down our focus, and everything we do is about markets. Every single one of our businesses is focused on information, intelligence, insights for markets. It's opinions, it's data, it's analytics, and we narrowed it down so everything we do has one type of customer.
There are a lot of people worried about the China trade war. I don't know if they saw what happened with you. You just got the first of its kind approval to enter China's domestic bond market. Maybe we're misreading the Chinese.
Well, this is a long-term play. I have this theory, and I've been working on it for years, that China is the largest trade economy in the world, and if they really want to have a power in the market, they've got to have a financial market, and a financial market requires a bond market. And so we've been working with the Chinese for a year, with the regulators, with the central bank, to point out the importance of having a bond market, a yield curve, and a credit curve. And so as part of that, we were able to get the first license ever for 100% wholly owned rating agency in China.
Now, how big can that get? I know it's a small audience, it's small group of people in your company working on it now, but that could conceivably be gigantic.
It could be gigantic. It's right now the Chinese market's the third largest bond market in the world after the U.S. and Japan. But mostly it's really a bank market. Even the bonds get issued go onto bank balance sheets. But there's almost 4,000 issuers right now already in China having a
wow, I didn't know that.
Domestic bond market. We rate 400 Chinese companies today in the offshore dim sum market in Hong Kong.
Wow, that's great because we're just thirsting for knowledge. One of the things I'm really proud of you doing, you just got to do it. No one else really did this in the corporate world. You have a tremendous amount of respect for Jack Bogle and what he accomplished. And why don't you tell our viewers what he really did for investing?
Well, what he really did for investing is he put in place a very simple index approach to investing. And we benefited from that. In 1976, he developed the first ever index fund. It was the Vanguard 500. It's based on the S&P 500. And over the last 10 years alone, the investors in the different S&P funds that we have saved over $150 billion in fees.
And this is million, it's billion people.
This is Jack Bogle. He created an industry, not just a fund.
I know a lot of people actually, when they get off the desk, they're saying, oh, that son of a gun, he wrecked our margins. But what he cared about was you, the investor.
He was looking at the ultimate investor. Who is the person he's trying to protect their interests or look out for their interests? And that was the fireman, the teacher, the nurse, the doctor, somebody that's investing their own money every day, and they want something that's simple, that's easy to understand, and it tracks the market.
Oh, I think the other thing you did besides just pay him the homage that I wanted to see so important, out of nowhere, but not because I know you, so it's not really out of nowhere, but you've decided to make a big statement about gender inequality. There are not enough executives, as someone with 2 daughters, who really believes the system's rigged. Not enough executives doing what you do.
Well, what we did is we have this approach to our community where we're going to talk about our people. We have partnerships, which is our philanthropy. We also have our products, and we do research. And in our research the last couple of years, we've been looking at what would be the impact on markets if women had a higher participation rate. And we used Norway as kind of the benchmark. In the United States, if we were operating at the same level of women's participation as Norway, our economy would be 8% bigger, $1.6 trillion larger than it is right now.
And there are a lot of companies, when you actually peel back the onion, they don't have a lot of women at top levels.
It's really something that all of us have to work on, including our own company. We're only at about 35% in our women in our management force. We have a third of our board as women, but there's a lot to do. But it starts with a tone at the top, and we believe that starts with our board, it starts with me, and we also have a lot more to do ourselves.
Okay, you've also made some acquisitions. I know RateWatch because you bought it from the street, and I remember us when we bought RateWatch, but we often hear at CNBC about Kensho. And that's like a bit of artificial intelligence married to financial tech. How's that working?
Oh, it's going really well. We did some work over the last couple of years to see what do our customers need. And our customers are drowning in data. They're drowning in information, stuff they get from the markets, but also what they generate in their own companies. And we needed to figure out how can we make more sense of it. We've got a data background, and we were a data company before we even knew it.
Right.
But bringing in somebody like Kensho, who has the artificial intelligence and the machine learning, the algorithms they can layer on top of it, it's just been a perfect match.
Now, last thing, I am worried, said this morning on TV, that I am really worried about the budget deficits, not from my side. Well, I'll be fine in my lifetime. How about my grandkids? I mean, it seems, Doug, I'm worried.
Well, you know, it's a long-term issue. If you ask me about some of the list of issues that I worry about in the long run, I do have the debt, and it's not just the United States, it's many markets around the world. We're going to have to find ways to balance budgets over time. I don't think it's a near-term issue we have to deal with, but it's one of the things that's difficult about that is that most politicians have a very short-term cycle, a re-election cycle, and it's hard to really deal with problems that go way beyond the election cycle.
Wow. Wow. All right, look, I want to circle back because I really want to leave this message again. That's how important it is, including, you'll tell me the hashtag. What inspired you? Many executives give lip service. They say, oh, yeah, we got to do better with women. What inspired you to do more than do better with women?
Well, we know the hashtag is called Change Pays. Change pays, and it really does pay to have that change. But what inspired us is that as we saw the women in our organization flourishing, and we see the kinds of opportunities there are for people coming into the workforce, we really required us to take a stand, and we decided that we would do it, and we'd try to take a leadership role on this.
All right, well, people should know two messages. One is this company has been radically transformed by Doug, and to make it so it's just a steady, fantastic earner, but also because of the message, what he just said about women. Wouldn't it be something if we added how much to the economy? 8%,
$1.6 trillion, and the total global market cap could be up $5.8 trillion.
I hope that you keep spearheading this. This is terrific. Doug Peterson's the S&P Global President and CEO. Fantastic numbers, people. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.